If you had a lender strike, which is to say the U.S. Treasury gave a Treasury auction and nobody showed up, and the Treasury had to buy the whole issue, then I think that you would have the same crisis in confidence that existed in 2008. And I think a recession is a logical outcome. Inflation is all about quantitative easing, which is to say counterfeiting. It's all about negative real interest rates. The level of interest rate, as we learned in the 1970s, is less important than the real interest rate, which is to say the interest rate on the 10-year Treasury minus the increase in the consumer price index. And I don't see the United States government having the willingness to deal with the underlying causes of inflation, which is to say we're consuming more than we're producing. We're subsidizing that with counterfeiting, they would call it quantitative easing, and with negative real interest rates. We're also causing it to occur with debt and deficits. We're forward shifting the liability for our high apparent standard of living by assigning the bills to our children, grandchildren, and great-grandchildren. There seems to be a fondness among voters to inflict poverty on subsequent generations rather than alter their own living standards. And that's extremely popular. So I think that the underlying cause of inflation isn't so much to do with, as an example, the increase in energy or food costs as a consequence of the war. But I think there are much stronger underlying causes of inflation. Between 35 and 40% of all the US dollars in circulation have been created in the last 30 months.
Wow.
Now,
Yeah.
was that done to accommodate an economy that's now 30 or 40% larger? Of course not. It has nothing to do with stock to float. It has everything to do with the fact that we voted ourselves a bunch of benefits and neglected to pay for them. And the only way that we could pay for them was to create specious currency units. Specious currency units, if you did it, are counterfeiting, unless, of course, you were Senator Camboni, in which case it would be policy and you would be highly popular. I believe that the economy that we're existing in today is buoyant partly as a function of artificially low interest rates, partly as a function of the fact that savers and voters seem not to care too much about quantitative easing or about debt and deficits. If you had a lender strike, which is to say the U.S. Treasury gave a Treasury auction and nobody showed up, and the Treasury had to buy the whole issue, then I think that you would have the same crisis in confidence that existed in 2008. And I think a recession is a logical outcome. I believe myself that the broad precepts of Austrian economics are correct, which is to say that you have credit-driven expansions and then you have confidence-driven contractions. It would seem that the political class, to the delight of the voters, has decided that we don't have to have recessions anymore. I don't happen to believe that's true. I think that there is a cleansing effect from a recession. Not that I want to inflict one on myself, but I suspect that irrespective of my own wants, that one will occur of its own volition. The US 10-year Treasury has been the standard by which all other securities are priced and judged. It's the most liquid savings and investment product in the world. And traditionally, the US 10-year Treasury, by traditionally I mean going back 40 and 50 years, traditionally the US 10-year Treasury has had a positive yield over the CPI stated rate of inflation. Your government, the US government, suggests that the current inflation rate is somewhere between 6.5% and 7.5%, depending on which agency you ask. And the US 10-year Treasury is yielding about let's call it 2, just to make the math simple. What that means is that if the pricing of the US 10-year Treasury were to return to mean and have a positive yield, it would have to yield about 7. Now, think of the impact on federal, state, and local budgets if the interest charge tripled or quadrupled. Imagine what would happen to affordability and hence housing prices if the 30-year fixed mortgage was to revert to the 4-decade mean. Imagine what a 7.5% first mortgage rate would do to the economy. If we go to a path where the economy is sustainable, which is to say that savers, get a real rate of return, and spenders are forced to bear the real cost of capital, I suspect that we would endure a substantial and unpretty recession, very much like the recession that we faced in 81 and 82, when Mr. Volcker rebalanced the economy. Now, rebalancing the economy set up a tremendous 20-year boom, but it happened at the cost of 3 ugly, ugly, ugly years in the economy. The circumstance that we're in right now, Daniela, seems to me to evolve around confidence much more than economics. Although it isn't true, I love to say that the root word of confidence is con. And the longer that savers put up with this foolishness, which is to say the longer that savers are willing to accept a 2% yield in a currency that's depreciating by 6.5% a year, the longer that the current set of circumstance can continue. I personally am orienting my own savings and my own investment portfolio to reflect a very real fear of a crisis in confidence and a very real fear of a recession. I am not one of those persons who buys the latest fad asset. I'm not one of those who buys a tech startup at 100 times revenue, or buys a SPAC, or buys an unpronounceable cryptocurrency out of fear of missing out. I'm a very different type of investor right now, a much more cautious, much more conservative investor who doesn't count on continued liquidity. I don't like to buy an asset class that I don't personally know how to value. I also continue to believe that gold, in a historical circumstance, and perhaps for speculators, silver, are cheap. I believe that having cash or cash substitutes is something that you have to do despite the fact that it costs you. Because if we do have a crisis in confidence, it would be very easy to see a replay of the 2008 circumstance. And if you had liquidity in a market that was illiquid, you would have the ability to take advantage of the circumstance, as opposed to being taken advantage of by it. I realize these are very boring discussions. I think, too, if you have a 3 or 4 year outlook, that oil stocks are cheap.